Hi and welcome to our video, What Next for New Build, in association with Precise Mortgages. I'm delighted to have some of the most senior people from our business here today to give their insight into what's happening in the new build market. I'd like to introduce Colin Barrett, Group Mortgage Proposition Director, Neil Richardson, Group Real Estate Strategy Director, and last but finally no means least, Dawn Murphin, our Group Underwriter Director. Thanks very much for joining us this afternoon, guys. Look, to kick us off, the last few months, trying times, testing times. Could you tell us what's been going on in your respective worlds, your respective divisions? What have been the challenges and where we sit today? Colin, could I ask you to kick that off if you don't mind, please?
Yeah, of course. Thank you, Adrian. I think this time has been difficult for everyone, customers, intermediaries, lenders. The hard thing we found is really just forecasting what's going to happen next. I think we can safely say the government doesn't really know what's happening next. We don't know what's happening next. And we're just trying to tack a course through this that means we can support customers and intermediaries while making sure we're here for the long term.
Thanks, Colin. Dawn, processing mortgage applications, working through pipelines. How's the last few months been for your world?
The initial issue was working through the pipeline with no valuations and getting those as near as we could. We're now happily worked through the pipeline. We're working on new propositional stuff. I guess the challenge is we don't get the documents we need to do the underwriting. So, you know, let's not bark on about it too much. But if you give us stuff to underwrite, we can underwrite.
I'm sure you won't mention that too much during today's video, Dawn. So brokers, listen up, please. Neil, obviously heading up the real estate department, really leading the surveying bit for us as a business. Can you tell us about the challenges and where we are now with the market with surveys, please?
Yeah, I mean, certainly, look, let's remember that when lockdown happened, the market ceased to function. There was no builders, trades went off-site, estate agents, show homes closed, valuers couldn't inspect, they were put on furlough, conveyancers were put on furlough. So it started to build a big backlog of valuations that needed to run through the pipeline. So the main challenges really for us were the procurement of valuations, but also ensuring that those valuations that we did get were accurate and reflective of the current market. Now we got around some of that by tightening a bit of product and credit criteria. We used desktop valuations, and also we enhanced our sort of quality assurance reviews in terms of the asset, mainly to sort of protect us. But where we are now is very different. We've seen increased levels of activity in the market. We're seeing more reservations, sales agreed, and exchanges. This has led to more activity. This allowed the valuers to rely on more suitable comparables. They've now sort of started to work through their backlog and probably only a week or so away from catching up and clearing their backlog in its entirety. Valuers have had to change their habits a bit. They're now looking at sort of how they look at their comparable evidence. So the hierarchy of evidence has changed somewhat. They're now looking at sales agreed, exchanges, rather than relying purely on transactional evidence. So it's been a tough time, but I think actually the valuers have done remarkably well to catch up. And there's now some certainty returning to the market to enable them to sort of provide good, accurate valuations.
And I'd echo that, Neil. I think, some of the feedback we've had from our broker partners has been, what a good job our valuation partners have done in getting us back to the place we are today. And I think what we've all realised is just what an important part they play in the mortgage lending process. So stick with you if I can, Neil, because, we're on the back of a mini budget or a budget. And obviously within that has been the announcement about a stamp duty holiday. Do you think it's the stimulus the market needed in terms of purchases? And obviously you see a lot of surveys, a lot of data. Are there any trends that we're seeing in terms of purchase volumes and valuation trends?
Well, I mean, I think it will add some short-term stimulus. It may sort of nudge those undecided buyers to becoming committed buyers. But actually activity was pretty strong. Values seem to be holding up. It does differ between certain locations and certain asset classes. So you're seeing some maybe regional differences and maybe flats performing differently to houses with gardens in suburban areas. But to be honest, Adrian, it's just simply too early to say where the market's going to go. There's still going to be some pressure on affordability going forward as the furlough schemes come to an end, as we see rises in unemployment. We might see some forced sales as the moratorium period for repossessions end. And also we've got the current Help to Buy sort of phasing that comes out in April next year. So look, I think that the government initiatives at the moment are welcome news, but are they the long-term sort of initiatives required to sustain sort of activity and house prices going forward? We're yet to see.
Time will tell on that. Which kind of leads me a little bit to you, Colin, in terms of, you know, what we've seen in demand of our current new build proposition, big supporters across our two main brands there. And do you think the budget news will, I guess, allow any product innovation in the new build market, or where do you see that going?
Okay, thank you, Adrian. So, as you'd imagine from a marketing guy, I'm a little more optimistic about the government's announcement on stamp duty. I think it's going to play well with customers, ones who are in the pipeline, ones who want to move, ones who need to move, ones who are considering a new build house. Certainly, with other crises such as this, and I accept it's a different one, we've seen customer demand remain relatively strong. And I think that's evident with the activity we're seeing now. As you know, I don't like the word innovation. I always think the last innovation in the mortgage market was the fixed rate. I prefer to think more of opportunity. And I think the government is doing the right thing. It's trying to stimulate the market. We know that when the housing market is buoyant, the country feels better about itself. So I think what we will see, if I'm honest, is I think we might see some products come out which are aimed towards home improvements. And we might see some stimulus, hopefully in the autumn, directed towards customers who want to make changes to the houses. And certainly that's where I think our focus will start to look. We support Help to Buy, we support shared ownership. LTVs are still challenged at the moment and will remain to for some time. But I think we're offering a lot of support to the new build market, which is vital. And I think this government stimulus now will continue to drive that upwards.
Thanks, Colin. I'll remember not to use the word innovation going forward on our morning calls. I should have remembered that. Dawn, look, as a specialist lender, we're here not just to support markets, but to, I guess, help applicants with special circumstances or situations that perhaps don't fit the high street or don't fit a mainstream lender. Obviously, we've got a bit of time for the furlough scheme to run. How, as a lender, do we look to assess these types of applications? And also, at the moment, you know, how would you go about assessing self-employed applications? What tips can you give to brokers?
I think the joy we had was that because we're a specialist lender, we never really subscribed to the tick box mentality. So with the furlough scheme, and the government made really clear guidelines on what the furlough looked like. So actually, from an underwriting perspective, it was relatively simple. You know, provide the documents to evidence the income you've got, and we'll crack on. Where there were challenges, where affordability had been impacted and we couldn't proceed, we were as flexible as possible. We extended offers where we could, and in particular where people had exchanged contracts so they committed. We also gave brokers and customers the option to wait until they'd returned to work if their affordability was impacted. And actually, we have seen very little fall off on the pipeline due to that. And I'm really proud of the way the guys dealt with that. We also had the support from the sales force, of course. You know, the sales force have been doing a lot of outbound calling to the brokers. So I think we work really well as a team to try and get through this. With the self-employed, we are looking for the letter that confirms the support they've taken from the government. And with that letter, we would use that in the same way we would. So we're looking for SA 302s, tax year overviews, and that letter if they've taken support from the government. We're not holding it against people if they've taken support from the government. That's the whole point of the support, right? So we are looking at each case on a case-by-case basis, and where we are struggling to hit the affordability, we're having conversations with the brokers on an individual basis to see if there's other income that we can take into account that perhaps they haven't told us about.
Yeah, and you know, thanks to the underwriting team and the proposition team, I think we really have worked quite closely together in terms of communications to brokers, and the way we manage the pipeline has certainly got us a lot of plaudits from our broker partners. Look, Dawn, you'll probably come back to the first point you made to me on this one, but I think it is worth going over. There's often a lot of pressure around speed, around turnarounds from app to completion in the new build market. I know you're working on some initiatives to improve some of those processes there, but you know, as you said earlier, what can brokers do to help themselves in this and help you and your team to get the deals right the way through from application to completion quickly?
Well, the main thing is tell us a story. If there's something strange about the application or it's not quite as clear cut, put a note on or provide a document to explain what the anomaly is. Now, underwriters are humans, believe it or not, and actually if you tell them a story, they'll try and validate the story. We're not all out looking to prove everything wrong. We actually are looking to lend and looking to help the customers. So provide base documents. You know, if it's a residential loan, I need to see proof of income, I need to see bank statements. If there's incentives on the deal, let me know what the incentives are. Let's not that be a surprise when the valuer comes in. So the more open and transparent and more documentation the broker provides, the easier the journey is from start to finish. Also, if it is a new build and there is a pressure on an exchange date, tell us the date. Because if we don't know it, we won't know the priority. So I think it's just about communication. And I've been very keen, once we're all back in the office, a little bit difficult working from home, but really I'm encouraging the underwriters to pick up the phone and speak to the brokers, because actually often you can solve these issues by a 2-minute conversation rather than 45 emails. So, you know, tell us what we need to know, give us what we need, and tell us anything strange. Easy.
Yeah, and I think, you know, I can only say that we see a lot of that in both of our brands. Obviously, times are a little bit more challenging with people working remotely, but that's certainly one of the reasons people come back to us in terms of using us for our new build support. We're doing this by video, so technology is moving at quite a fast pace. We're in our virtual Precise offices around the country. Neil, during this period, obviously, valuations, you touched on it earlier, desktops. Where do you think that side of the market is going, or use of desktops or digital vals? And, you know, could they be used in specialist lending? And if not, why not?
Yeah, I mean, that's a really good question. I think the working through sort of COVID-19 and the lockdown has certainly opened the minds of many lenders in terms of their valuation strategies and methods of valuation. And, you know, AVMs, desktops, assisted desktops, valuation risk models, whatever you want to call them, they certainly have a role to play in lending going forward. But at the moment, they're really set up for the more homogenous type residential stock where there's a lot of liquidity, confidence levels are high. We didn't use desktops for new build during COVID-19. One, we wouldn't have got, or the valuers wouldn't have got PI cover for it. But two, it is genuinely specialist marketplace. It's a specialist and complex. You know, you've got leasehold interest to consider, cladding on buildings, PDR schemes, disclosure of incentives, transparency around the valuation. And, you know, it has many features there that you actually need the expertise and the market intelligence of the valuer to opine on. So AVMs are a great place to play, and I'm sure Colin has some ideas in terms of where it can fit into his product set going forward. But at the moment, it's not quite for new build.
Thanks. I think it's a really concise answer and really clear, and gives an insight to the users on that. Colin, Neil touched on a bit on the products, and I'm not expecting you to give away the sort of crown secrets there, but you're very much involved in the bank's digital journey in terms of mortgage processing. Yeah. Do you think that actually COVID has enhanced or moved that direction on, or do you think that it may slow down as a result of COVID, with lenders focusing on other bits around their own business? I'm talking about the integration pieces, if I can.
Of course. I think what COVID has proven is that there are different ways of working and different ways of making things happen. I think there will be a myriad of technical solutions presented to lenders and presented to the industry to solve perceived challenges and perceived issues. The reality is this industry is ripe for some technology to help improve the process. It's straight from and right from point of sale all the way up to conveyancing and completion. And we've seen some of our larger peer group lenders and some of the high street lenders really lead the way with this. And I think it's harder in the specialist market to deploy some of this technology, but that doesn't mean we shouldn't look at it and we shouldn't look to do it. So my view is over the coming years, there will be a move to more technology that will improve the journey for customers, improve the journey for brokers, and importantly, improve the journey for lenders as well. I think it has to work for everybody for it to be effective. And we see things like digital signatures. We know the conveyancing market is working on improving it. Do customers need to leave their homes to buy a house anymore? What does that look like? So we'll see a lot of changes, but we want to be up there with everyone as we start to see this moving forward.
Yeah, and I know we see a lot from your team in looking at all of these angles. I'm sure there'll be more people approaching you with various solutions over the coming weeks and months as we come out of this. Look, obviously with COVID, we've seen a slowdown in various bits in terms of supply chains, and that in some instances includes the finishing builds on houses. And this is really, I guess, Dawn, Colin, in terms of proposition and underwriting. Where do we see the validity of offers going, and particularly if we see delays going into the winter and autumn in terms of some builds being made? Colin, can I pick your brains first and then on to Dawn, if that's okay?
Oh, yeah, of course. I think this is one that comes down to the broker and customer journey at the end of the day. And as a lender, we want to make sure that we can support any challenges that are going on the market within reason. So, I think from our perspective, we work very hard from proposition, from the sales, and from an underwriting perspective. And this has been a real highlight of our journey as we've gone through COVID. It's brought us all together. It's given us a much better chance to work. So, I think I'll hand over to Dawn to answer it in a bit more detail, but the general direction of travel is we want to do things that are right to support the customers, which in turn supports us and supports the brokers.
Thanks, Dawn.
Yeah, so we had a slight different in policy in regards to validity of offers in Precise and Ken Reliance. And since we've come together, we're trying to bring together some of these points to make it smoother. So where brokers use both brands, they're actually getting a similar journey rather than a different one. So the first thing that really did come to light in COVID was the challenge where offers were valid for 3 months, and obviously the completion couldn't happen because conveyances weren't there, the properties weren't finished. So the first thing we did was go to our credit department and say, we have this challenge, we've got this pipeline of new build applications, whether they're new build or whether they're shared ownership new build, where actually the offer is about to expire. Through no fault of the borrowers, they can't get to complete because there's no conveyancing, etc. And we got approval to extend the offers up until the valuation was 7 months from date of inspection, which is actually quite a long period of time in the real world. So with the exception of a few that actually we'd already extended, so we had to do a new valuation, but we didn't make the broker key the case again and start again and redo affordability, because that's not fair on the customer or the broker. We actually just instructed a new valuation in the existing case so that we could extend it further. So I think we did everything we could for the customers and the brokers in those scenarios.
Yeah, thanks. And I think it was definitely appreciated. And again, it's one of those bits of working in partnership as a collective, as a team internally, and with the guys that support us outside to provide, I guess, positive outcomes for the customer at the end of the journey. Neil, we've mentioned the word cladding a few times during this video so far. Look, what are we doing as an industry? You sit on many, as I said, of the committees out there. Is there a collaborative approach that's going on that will provide some consistency in all of this? What's your view on the situation?
Well, firstly, I have loads of sympathy for homeowners and occupiers of high-rise buildings at the moment. I think there is a consistent approach in the market at the moment. It's just one that's not workable. It's risk-averse and disproportionate. It has led to mortgage prisoners because their properties have become unmortgageable and unmarketable. It's not workable because there's simply now too many buildings that fall within the category that need fire risk assessments, and there's just not enough qualified industry experts with PI insurance that can assess those buildings and deem them safe. The solution has to be an industry-wide collaboration. It does need the government, it needs the RICS, corporate valuers, PI insurers, UK Finance, and their member sort of lenders. So everyone is starting to work together. They realise this can't continue in its current position. So I think the approach is to take a much more risk-managed approach, a more proportionate approach. So we get the experts focusing their minds on those buildings that need the remediation quicker than others. So that's really focusing on the high-rise buildings. But where the lower-rise buildings, where the risks are lower, the remediation costs are less, and all buildings that are of certain age, we should be able to take a more risk-based approach. So I think that's what the industry is working towards. look, I mean, it's 3 years since Grenfell, so it's taken a lot longer than what I think everyone would have hoped, but the direction of travel's a strong one, and we're certainly working together with all the rest of the industry to come up with a suitable solution. But it needs a consistent approach across the whole market.
That's great. Thanks, Neil. Thanks for the honesty there. And I know you work tirelessly behind the scenes on behalf of One Savings Bank as being our representative there. Look, hot off the press, I've got a couple of final questions, and one is for you, Dawn, which was obviously following the changes to stamp duty. How as a lender do we view incentives where the stamp duties have been paid?
Well, we up to 5% of the value or the purchase price, we ignore. So some builders provide legal incentives in terms of cash for legals or stamp duty. Up to 5% we allow, but it must be declared, because then we inform the valuer on the incentives form, and then the valuer takes that into account, so you get a true market value. So 5% is fine. Above 5%, we do adjust our lending accordingly. But the most important thing is tell us about it, because often we don't know about it till the valuer goes out. We've spent the customer's money, and actually it's not a good thing to do to spend the money if you're not going to be able to help.
So disclosure is important in terms of that. Okay. I guess to wrap up, Colin, finally with yourself, if you don't mind, how do specialist lenders and I think in particular Precise Mortgages and Kent Reliance how do we look to support the new build market going forward?
Okay, thank you, Adrian. Well, I think our view of the new build market is that it's very much the lifeblood of the housing market. We need houses to be built. We need to get people into houses. We need to support landlords as well, who also buy new build.
Let's not forget landlords.
Let's not forget landlords. We've talked a lot about first-time buyers, but there's other people who buy new build properties. So what we do is we look at the products that we've got. We make sure that we support new build. We're looking for options to work with building firms, work with specialist intermediaries, work with the general market. And we look to design our processes, policies, underwriting, and products to support what we see as a very important part of the market. So I think please give us feedback on our products. Please let us know what you'd like to see from a specialist lender, and we'll have a look at it. We don't just have all the ideas at this end. In fact, far from it. We require feedback and comments to help us do that. But we're well placed. We're committed to this market, and we want to look to the long term, not just the short term.
Thanks, Colin, and thank you, Dawn, and thank you, Neil. The last half an hour or so has been really valuable. Hopefully our broker partners will enjoy this, and hopefully this is first of many of these videos that we're going to do going forward. So thank you all for your time, and have a great day.
Thank you.